Welcome to Media Empires, where we sit down with the most influential media creators right now to learn exactly how they built their empires. Our aim is to extract the secrets of top-tier podcasters, newsletter authors, and media creators who are breaking the old rules for media success. Whether you're looking to start your own empire or simply curious about the nuts and bolts behind media businesses, you'll find valuable insights and tactics in each episode. Grab your headphones, let's dive in.
This week on Media Empires, we have John Yedinak, the founder and president of Aging Media. In this conversation, John shares how he built a media company focused on the senior care sector. We also cover different business strategies in media, such as profit splits, podcast monetization, and multi-platform growth.
John, welcome to Media Empires. Thank you for joining.
Yeah, thanks for having me. I'm excited.
So, John, you're your fellow business media nerd. In fact, when I was getting into this, you helped give me a little bit of the lay of the land. Why don't you give the audience a bit of your background of how you got into business media and the success that you've had?
Yeah, so kind of give you, again, thanks for having me. My kind of background is, So after school, I got into the mortgage business. So I actually dropped out of school a little bit early. I was working for the Dallas Mavericks for a little bit, decided school wasn't necessarily for me. So left school, started working in the mortgage business, and was reading a bunch of stuff about the mortgage industry to try and get better at my job. So I was selling loans to different brokers and things like that. And so kind of stumbled into trade media and things like that. And was reading a bunch of stuff like American Banker and some other big publications that are still out there. And this was also when TechCrunch was kind of at its rise. And so Michael Arrington, who I've always kind of looked up to, was starting to have a bunch of success and I was always into tech. And so I was reading about him and his business. And, I'll never forget, it was like, I was reading an article, I think it was in like PC Mag or something, probably back in the day. But he was making $5,000 from these like 180 by 150 ads, these tiny little things on the side of the page. And for a guy that was making, $32,000 a year, I was like, holy shit, he's making that much money and he has like 10 of them. So, me being, I was raised in an entrepreneurial family. I was like, if he can do it, like, why can't I? And so because I was in the mortgage space, there was an area that was starting to take off in the reverse mortgage space, which are loans for people 62 and over. And so I decided, I was like, you know what? It was right when blogging and kind of WordPress was starting to take off. I was like, so I registered a domain name the day after Thanksgiving, probably about 15 years ago, called Reverse Mortgage Daily, and got into that. And so really just started kind of sharing articles and kind of trying my best to do a little bit of reporting because at the time my job was starting to shift towards that space. A couple of years later, was able to make a couple bucks. I hired my first employee, Liz Ecker, who stayed with us and is still actually at Aging Media. But we hired a couple of people, and my brother, who founded Aging Media with me, he had started a website called Senior Housing News. So at that point, Senior Housing News was much more, I'd call it like more prosumer. It's kind of the new term. There wasn't that term didn't exist back when we started, but he had like a real job working in banking for Wachovia, and he was doing it on the side. So I said, I think we probably had maybe 2.5 people at that point. Took Senior Housing News, we flipped it hardcore B2B, and it kind of just took off. So since then, we went on to launch, 6 other publications. So this Aging Media started about 12 years ago. So we eventually became the largest publisher in senior housing, home health, skilled nursing, hospice. And then about 3 years ago, we got into the behavioral health space. And so that was our first kind of entrance outside of the senior care sector, but also still very focused on healthcare in general. So through that process, we got pretty good at spinning up new verticals, launching into new things, really having kind of a playbook that we could launch into, at least in my opinion, any market, whether it was healthcare or anything like that. And so really developed our thesis and we got better at executing it. And then in June of last year, we exited the company to a company called WTWH Media, which is backed by a private equity group called Mountain Gate Capital. So we decided it was time to take a break, or at least for me. It was time for me to exit. And so we did that deal, and been super happy. So it was a great deal for George, who is my brother, obviously, and he stuck around as part of the transition. And I decided I was done. So the people at Mountain Gate and WTWH were fantastic partners. George is happy where he's at. They're doing some cool things. And, I'm still an investor in the business, but right now I'm just kind of enjoying the time with my family, watching, the media space, trying to figure out, when and if I want to come back in. I think it's more when, not if, but I'm really kind of enjoying my time away right now. So it's been nice because we grinded for, just a little over a decade, to be honest. So it took us some time to figure it out. But I'd say the last 5 years, we got really, really fucking good at what we do. And that was really where the growth came from. So
fascinating. So talk about how you thought about when it was worth expanding to a different sector versus saying, hey, we could be successful at this, but it's not worth the squeeze, for example, because that's something I think about a lot as we're building Turpentine, and I don't really have a formula for it. How did you guys think about how to identify sectors and when it really makes sense to build around it?
Yeah. So initially, when we got into senior housing, we really looked at markets that our customers were already in, that they were starting to see opportunity in. And so we'd look to see, is there anybody covering the space? Is there a way that we can kind of carve out another niche? But the great thing about a lot of industries, honestly, is that I'll take hospice for an example. Everybody laughed at me when we got into hospice, but what people don't realize is that hospice is a $26 billion industry in the US. Okay. And this is probably 5 years ago. And so if you look at the number of baby boomers and how they're getting older, it's only going to get massively bigger. It's hospice was twice the size, I think, of men's shoes in the US. And do you know how many men's shoes publications there are out there? And so it was one of those, we really, at least when we were specifically in senior care, we were looking for stuff that was interesting to our current customers, that we knew that when we announced, we would have kind of already a little bit of a built-in audience. And it wasn't a major leap for us from a content and just an execution standpoint. And also the nice thing was a lot of people that were in senior housing were also in home health, and they were also in hospice. But what we learned as we got into them is while they were complementary, they were all very different businesses. And so it wasn't one of those that we could cover very well from one publication. It had to be separate ones, because that enabled us to not only hire staff that was really good at covering those spaces, but also really focus on the people in those individual spaces, because we always looked at it from just an executive level. Sure, the CEO or COO might have to know stuff about them, but those VPs or the general managers that are running those businesses really have specific needs that you can only really tailor content to if you really went deep. And so that was really kind of our superpower, is going deep on specific markets that, were really big. Complex is also very important, because if they're not complex, you can't really add that much value. And honestly, we kind of looked for spaces that were unsexy. We kind of leaned into that for a little bit. And I say that joking a little bit, because obviously I think senior care is incredibly sexy, incredibly interesting, massive industry. But it was one people didn't really pay any attention to. And now they are, after the success that we had. But that's really how we looked at it. And I would say the behavioral health space was interesting, where we had done it in senior care. We had kind of picked off all the verticals that we could, that we thought were big enough that day. There are some other ones that I think eventually we will go after, but they weren't mature enough to really make a real business out of. And I think this is one of the things, is niches are great, but they have to be big and they have to be complex. A $2 to $5 billion industry it's not that exciting to me, to be frank. And so it's one of those, you need something big that you can go after, because if you want to launch events, ads, paid subscriptions, webinars, white papers, you really need kind of a meaty market that has a bunch of advertisers, a lot of engaged readers, and different things like that to really make a business out of it. But behavioral was really our first. Truthfully, we went into it thinking that it was going to be more of a senior focused behavioral health business publication, because, if you have mental health problems, frankly, people, and whether it's addiction, mental health, I don't care if you're 16 or you're 65, everybody deals with this stuff. But when we got into this space, we really looked at it from a perspective of, holy shit, there's so much more here. And so we spun it out. And while it was part of the Aging Media umbrella, it really catered to a more general or specific but wider healthcare market than we ever have. And I'm really proud of how fast we got it up to, I'd say, of a substantial size, because it was actually the first publication that we actually used any paid advertising on. So all of our other stuff was just totally organic before. And so we were able to grow it just over time. So generally it would take us 2 to 3 years to get a vertical to profitability, where we were able to do that quicker with behavioral health. But we also used paid advertising to get there. And so it was one of those where we kind of had to prove to ourselves, can we do this in other healthcare markets? And so it was also a way for us, if we wanted to expand into more general healthcare, it proved that our model worked and that our playbook worked, because we do the same thing on every different vertical. It's just one of those you have to be able to execute on every day, have a dedicated team. And so that was really exciting for me. I would say that was when we sold the company, that was the one where I still really pay close attention to what the team's doing, because they're awesome. And there's just so much runway for what we can do there.
Let's say you were starting again today in 2024 and wanted to build similar vertical media, similar play, but you weren't constrained to healthcare or kind of because of the advantages you've had there. What are some examples of verticals that are interesting to you that you would explore that fit the criteria that you're mentioning?
Yeah. Truthfully, there's none. I mean, there's tons, right? So I know healthcare really well. I need to stay away from healthcare for a while, for a lot of different reasons, happily. But it's one of those where, honestly, I look at big markets. I like B2B. I'm not a big consumer media guy. I don't think there's a lot of, I don't want to say easy money. I think it's more difficult to make money there, where I'd rather serve a much smaller audience that's frankly worth a lot more than a $5 to $20 CPM. I'd rather get a CPM of $140 or even higher, and things like that. And so I think even if it's, now I have more capital that I can deploy, I really look at it from a function of, I'm looking for big, kind of the same thing, like big markets that are super complex, that frankly, the stuff that at least that I'm looking at and kind of areas that I think are more exciting is looking at traditional B2B media companies that aren't doing a good job in big markets. How can we come in and kind of disrupt those markets? Does that make sense? And so it's a function of there's still a ton out there. And it's what people don't.
One example of a market, is it like agriculture or like cybersecurity or like banking or like?
Yeah, honestly, I think cybersecurity, I think, is pretty good. I don't know it as well as I should, and I don't want to tip my cards too much here, but there's nothing that I'm generally looking at. I also look at it from a perspective of all right, so you probably see golf clubs behind me. Love golf. Golf seeing massive investment from the PIF, which is the PIF fund, and all these different people, and so they're trying to do stuff. So I've actually I don't know, frankly, I've looked at are there business golf publications out there? And there actually are, but guess what? Most of them are trash. And it's one of those, is there a way to do that? Because I also look at it from a vertical integration standpoint. Not only are there, PGA Tour professionals who teach golf, but there's also people that develop real estate for golf. There's also people that need tractors and shit to build golf courses. And there's all these different plays. And so if that gives you an idea of kind of how I look at it, where it needs to be multidimensional, it can't just be one thing. Because the more complex it gets, the more that we can add value. And I like stuff frankly, real estate's fun. Regulation is really good. There's a lot of money to be made there. So, truthfully, the things that get me excited right now is I look at stuff like what Punchbowl's doing, right? I think they're doing a great job. Stuff that is catering to smaller but really influential audiences. And I think that's where you'll see me kind of come back, should I eventually. But yeah.
So yeah. Regulators or policymakers, whether it's federal or local. Yeah, that seems like
in specific industries though. But if you think about it, it's whether the finance, banking, cybersecurity. I mean, I'm sure that I know Politico has a cybersecurity newsletter, but I think those are really the industries that you can play on. And the crazy part about this, which is what I don't think most people realize, is that coming in, disrupting traditional B2B media. I'm not saying it's easy, but I do think it's very doable. Especially if you know what you're doing and you have a playbook, which, I think the playbook that we had, which is exclusive news, insights, and analysis that you can't find elsewhere. Okay. You kind of build your editorial teams around that. You have to execute every day, which is hard, but it's much easier to come into B2B and look at some of these substantial business media companies. And you look at what they're creating every day, and they're really just regurgitating press releases. They might only have one or two people. It's when we come into markets, generally we come in with 2 out the gate, and then we'll grow from there. If you have, let's say, 3 to 4 editorial people, you can cover really big markets in really deep ways. And so it's one of those, most people, at least in B2B, don't want to put the investment into editorial like that. But what you quickly realize after you've done it enough is that by having that great premium editorial product, you come in with an advantage, and you come in with the product, frankly, it's better. And so it's one of those where generally that's going to attract advertisers, going to attract more higher value subscribers, and it kind of steamrolls. And so that's really how I look at the market. And I think there's an easier opportunity if somebody wanted to go and disrupt multiple markets, fairly quickly and with not tons of capital. I think he can do it.
Yeah, fascinating.
Hey, we'll continue our interview in a moment after a word from our sponsors. Hey, everybody. If you don't already subscribe to the Media Empires newsletter, you should. But that's not what I'm here to tell you about. The platform we use to power this and other Turpentine newsletters is called Beehiiv, and it's excellent. First of all, it was started by the same early team who helped build Morning Brew into a $75 million newsletter business. And they built Beehiiv to offer that same powerful functionality to anyone sending emails, from essayists to business owners. The platform is beautiful, their text editor is intuitive, and they help you scale your audience with custom growth features. Beehiiv has powerful tools to help you monetize your content. You can easily launch paid subscriptions or pursue an advertising model. The Beehiiv platform will even connect you to premium brands to sponsor your newsletter. Not only do we use them, but thousands of the top newsletters in the world also use them, like Milk Road, Blockworks, Newsletter Operator, and so many more. Beehiiv's founder hooked up Media Empires listeners with a sweet deal. Get 20% off for 3 months with code EMPIRES. Visit beehiiv.com, that's BEEHIIV.com, to get started.
You had a tweet the other day or at the end of last year about how you would start a vertical from scratch, and just to share some highlights. So what is the team you put together is an editor, someone who plays a player coach role, a reporter, you said all in about 300K. Why don't you say more about what that initial team needs to look like?
Yeah. So this gets easier once you have a bit of like a shared services model. But if I was looking to bootstrap something, it's the exact model we used in Aging Media. It's not complex. So I think you look at any modern B2B media company, that's really how I think at least the best ones are doing it. But it's one of those, you need an editor, hopefully with some domain knowledge expertise. They're definitely a player coach. And so it's one of those, they're not only going to write, they're going to edit, and they're going to assign stories and different things like that. Then I'd hire a young reporter. And when I say young, I don't mean cheap. So generally, we were above market. So let's say your editor is going to be making anywhere from 80 to 100. Then you've got a reporter that's going to make anywhere from 55 to 75, like generally. Okay. And then, you go into a market with that, and then hopefully you hire a salesperson. But like, as the entrepreneur in the room, it's like, I've developed media kits, I've designed them, I've done all that kind of stuff. And so it's one of those where you do that for 2 years. That's about 300K, right? Without my salary included or whatever. And you give it a really big go. But like what we also learned, at least with behavioral health, and what we got pretty good at it, we were getting better at it, like by the time when I exited, but also it was setting aside budget. So it's like set aside $100,000 a year for budget for paid ads that way. Because it's really tough to honestly sell a newsletter when you only have 500 people on it. But once you get to like 5,000, at least in the B2B space, there is a market there. And so it's, frankly, even with like hospice, I think we probably had 2,500, $3,000. I don't want to mistakenly say here, but we were doing probably $500,000 in revenue with like a 2,500 person list. And so it's one of those where, yes, we had multiple products and different things like that, but I think that kind of is the framework and kind of the tent pole of like your initial investment. You can do that in multiple verticals. And so I think if I were to do it again, I'd probably pick 2 or 3 to go into initially, rather than just one, and kind of go from there. But I think, there's really no like secret. I think any of this stuff you can kind of find out. You talk to enough smart people, but the hard part is doing it every day. And so it's one of those where, how do you develop an editorial product that caters to a need that's not being met, frankly, caters to people that actually matter?
Yeah, that is a good description. So you've been doing business media for a long time, but it feels gotten increasingly excited about business media as business media has become an increasingly better business. And there have been examples of it. You have a great post titled "Why 2019 is the Year of Vertical Media." And it's only gotten more exciting since in some ways. So talk about that evolution of what have we learned as an ecosystem of why business media is so exciting, maybe starting with Industry Dive, but then also the Axios and the Pucks, et cetera. Like give a little bit of an overview to the audience.
Yeah, no, I think, what I learned so with B2B, it's like, I think a lot of it almost kind of dovetails a little bit into like the creator stuff a little bit, but it's one of those, what I found out was, number one, I think at least B2B media has always been a good business. I just think most people were too dumb to look at it. And so it's one of those where it's always been about EBITDA and B2B. It's never been about revenue. And, you're not selling any business unless you have any EBITDA, at least in B2B. And so it's one of those where it's always been I don't want to say it's always been profitable, but historically B2B is where you would put your money because you could see a profit margin of 30%. Okay. Yeah. Well, yes, that might be like the higher end of it, but it's one of those where everybody was chasing scale and all this kind of stuff. And at least when we got into it, I mean, we didn't have the money to chase scale, so we had to find another place to do it. But what we found was that, by targeting these highly influential and monetizable audiences, which is, I think, is something that, I think the creator shit is like getting wrong, where it's like everybody just wants really big newsletters, but I don't actually know how like valuable those actual subscribers are, because guess what, you only have like an email address and you don't have any like real data on them, and there's a lot of holes there. But I still like the market. But I think when you talk about why I was so bullish on media, as we started to get into it, and we found that, so I always say there are good media operators with one publication, but in order to be great, you have to be able to do it in multiple verticals. Okay. So it's one of those where the beautiful thing about B2B is if you have a good playbook and you have a good way of executing, you should be able to do it in multiple markets relatively easily. And so it's a function of you do it well in one. Okay. The best are going to be able to do it again in another, and then again in another, and again in another. And again, it requires special, unique expertise and specialization that is harder to find. And I think there's challenges with that. But the whole repeatability aspect of it, I think, just makes it so exciting. And frankly, once you get it up to a certain size, you can have an events team, you can have a branded content team, you can have an ad ops team. And guess what? They can service multiple publications, and it can kind of grow like that. But again, it's one of those where getting to that point isn't easy. But I think the ability for people to execute, and entrepreneurs specifically, to execute in these markets is a much easier than it is in consumer, which is just kind of like a pumping up these, websites that have tons of traffic and low CPMs and different things like that. So I guess that's why I've been so excited about it. But also part of the reason I've been so excited about it is like, we launched the company off of it was like little college dropout me with a WordPress blog and a MailChimp setup and, shitty $5 hosting a month from GoDaddy. Like, it was easy back then, but now with the technology and different things that are available, whether it's like Beehiiv, ConvertKit, all this kind of stuff, it's like so much easier now. And so it's like, but tapping into that expertise, which I think you guys are starting to do more, or not more, but you have done, as how do you take that template and repeat it and help people out where, I don't know, that's why I get excited about it. And I love the creator stuff. I just think, I don't know, I think 2024 will be a year where you start to see a lot of them kind of flake out a little bit.
And when you say the creator stuff, you mean sort of like the rise of individuals over institutions, or like sort of how social media has just given them easier opportunity to build audiences, and how we're continuously like deferring to individuals more, and they're sort of the Mr. Beast is the craziest example of someone who it seems like 1 in 10 people are in the world follow him or something, and he's able to amass this crazy audience, but then also sell other things to that same audience. And other creators are starting to realize sort of that it's a very crowded world out there, and it's much easier to build products now, but what's harder is distribution and owning your customer. And so that's kind of the broader creator thing that you're identifying. And then what you're also identifying is that B2B influencers can also be a thing. Industry Dive is kind of this faceless sort of, just brand, not individualized, but we could take what we're seeing in sort of creator land on consumer side and apply it to B2B. Sort of, what would you add to that characterization?
Yeah, no, I think so. Like, all right, just for sake of like clarity, I really see the creator B2B opportunity as like the bigger opportunity in my opinion. Again, I'm not going to say I'm a consumer expert, so let's just kind of focus there. But it's one of those where I see real opportunity there because there's people with unique insights and knowledge that has gained them a certain following. Now, I'm not saying it needs to be massive or huge, but I think the following needs to actually be very valuable, and they need to be of a certain caliber. And so I think it's one of those where the tools that are out there, whether it's like LinkedIn, Twitter, email is kind of the holy grail in my opinion. But it's one of those where there's these people who have this influence, and also just the startup costs are so low. So if somebody wants to share stuff, there's literally almost no cost involved. And so it's one of those where you really can rise to the occasion in terms of like having a unique product and unique insights. But where I think the model starts to fall apart a little bit is, all right, so like selfishly, and I was kind of like a creator back in the day, 15 years ago or whatever, when I had a WordPress blog and I was using WordPress.com, like before I even knew how to do like a self-hosted version of it. Okay. but I was in the reverse mortgage industry. Okay. And I was able to make, $300,000, in revenue with very little expense. Okay. Other than just my time, which, as a 24-year-old or 23-year-old kid, I was doing pretty well. But where it starts to really fall apart is like, if people are craving or want all this content and you want to build a real business out of it, it can't just be about you. It has to be about something bigger than that. And so that's where I think it starts to fall apart. And I think the really crux where everybody's super secretive about it. And I'd love your take on this, because I think you and I, based on a couple of conversations, I think see a little eye to eye on this. But it's like, if you're going to provide like services, or you're going to help creators in terms of like backing them and different stuff, how do you actually structure a deal that's valuable to both teams? Because the reality is that you're building a brand off somebody's face. And my brother George and I would always say is like, we were never the face of our companies for a reason. One, we weren't an asset that we could sell, but two, like, God forbid something happened to us or that happens to that creator, is there even a business anymore? And so it's a function of, but like when I was doing the reverse mortgage stuff, like I was getting so burnt out, I had to build a team. Okay. And so rather than like give away part of my company, I just hired a couple of people, which I still think is probably like the way for most people to do it. But I don't know. I feel like I'm bouncing a little all over the place. But what are your thoughts here? I think you and I kind of see the same here.
Yeah. Well, I'll share our how we think about creator partnerships. I've benefited from other people coming on this podcast and sharing their learnings. So I'll do the same. So with the caveats that we're still early, we're only right now in podcasting really. And so, all this stuff we're still figuring out could evolve, but we basically have a few different models. So there's some people we work with who have no audience, and some people we work with who have massive audience. The people who have massive audience or big audience, we do a 50-50 profit split on the podcasting. And usually we own the feed and the IP, but sometimes we just own the feed and they own the IP, particularly if they have like a pretty big newsletter or something and we're leveraging. And so what that means is if they decide to part ways for a while or at any point, they can take and we've had that, once or twice, or we're about to have that once or twice. They can take their sort of name and even the content itself, but we keep the channel and we can put something else on the channel. So we had that with, or by the time this podcast comes out, we will have had that with CJ, our CFO host, who's an amazing guy. He's the Lenny Rachitsky for CFOs, and he's realizing, hey, you were very helpful when I got off the ground, but now that I'm off the ground and I have this audience and I have the sponsorships, why does it make sense for me to give you 50% in perpetuity? I get it. It's almost like, if you're a startup and you took, gave YC 7%, and then, when you're off to your Series A or Series B, you're wondering, hey, why does YC still own 7%? What are they doing to continuously earn this 7%? Fortunately, investors just keep their equity forever, but our kind of deals, it's a little bit different. So that's why we really want to own the feed, because we don't want to put all this work and then, not have anything for it. So CJ has left. He took his brand, he took his content, but we just put another CFO on that show. Where our numbers look pretty good. It's interesting. I mean, I left the Village Global podcast. I did hundreds of episodes. I was the star of that podcast. They replaced me with someone else, and the numbers kind of stayed the same. Like podcast audiences are pretty loyal, it seems. Maybe that's different for different formats, but that's the one we're operating now. And maybe I'll have learned new things by the time it's over. But so we do 50-50 profit splits, but for hosts without an audience, we actually take everything. And the way we kind of say it is like, hey, if you were going to do a podcast, you would pay money. So we just give you a podcast for like Pod People charges like $6,000 per episode for like that's the highest end, service. But like, we're going to help you grow your brand and audience from nothing to pretty significant. And maybe that could change over time, but that's kind of how we do it. But we don't really see ourselves like in the talent business first and foremost, because you're kind of at odds with your talent as they get bigger. And and startups and VCs are at odds too. It's just VCs have their ownership baked in and they can't, there's no like Taylor Swift, trying to get out of it. Whereas in the talent business, there is. And so we think about talent as a wedge to build our own brand. and our own feeds and our own audience that we could then use how we want to. So we want to be in partnership with talent and, accelerating them and emboldening them, but never dependent on them. At least that's how I think about it at the moment.
Yeah. So like, I think it's more complex a little bit. Maybe, I mean, again, you're definitely more of an expert on like podcasts and stuff. And I've been trying to get better because I've been seeing like little podcast deals come across my email on different things, but it's one of those where I think it's more complex when it's like email. Okay. Like
Yes.
when there's an email list, how does that get distributed in a deal where it's like, again, I'm not saying there's no way to do it. Like I like the JV idea where it's like, okay, I think Slow has a little bit more of this view, at least. And now they're talking a bit more consumer, but it's one of those where how do we make an investment in like you or the brand, you as the brand, and we own an equity interest in that. Okay. We help, and that money is then used to help you grow the brand. And then we should see upside as a result of that. Okay. And it's like a long-term partner where like, I also see yours where it's like, sure. I mean, part of this is where I think it's funny. It's like, everybody says creators can make all this money and they can, but I also look at like be a good B2B journalist. I mean, you're going to be making, when you get to be really good in your space and you're really valuable, you're making over six figures, like no doubt. Like some of these people are making a couple $100,000 a year. And so it's a function of like, you run into like attracting and retaining talent, no matter what business you're in. But I also think the creator space is interesting where it's like, sure, like your CFO person might've left, like, and I'm sure we all hope he does fantastic, but it's a function of like, is there a way to do it where, I don't know, do you renegotiate contracts every couple of years where it starts to change? I don't know. Is it just one of those? But then again, it's like, I don't know, you're an entrepreneur. I am too. Can you really sell that? I don't know that you can. Like, and so it's a function of, again, when we were building our business, it was always, eventually we knew we would sell. And how you do that is there has to be an asset to sell that like, not that will kind of live in perpetuity, where if you're always losing talent and the talent is the face of the asset, there's struggle there. But like, there's a way to make it work. I don't think anybody's really figured it out yet, but like.
Yeah, it's interesting. So our dream is that the talent creates data or creates something that outlasts them. So I've been obsessed with Tegus. Tegus is a collection of 70,000 transcripts. Every podcaster produces a transcript. Maybe every article also could produce something that goes in this database. And my goal as we let out one of these is that the talent continues to create transcripts that we could then put in part of our paywall thing, that even if they leave, we still have access to it, and maybe even in theirs in perpetuity, because it's not like they're doing anything with the transcripts. And so it's not a big give to them. But I haven't proven that out.
I listened to your one on this. You called it was interesting how you described it. It was like the exhaust of the data, like the data exhaust or whatever. I thought that was an interesting way to describe it. I never thought about it like that. So it's kind of the tail end that nobody cares about it, but is there a way to actually monetize that? And there's a there. I feel like
that's my aspiration. I'm gonna try that out, see if it works. Right now it's just advertiser driven. But yeah, that's it's very interesting. And yeah, right now, as you mentioned, we're just in podcasts, but we're going to want to do partnerships around newsletters. We're going to want to do partnerships around events. We're going to want to do partnerships around other formats. And we'll have to figure out how we work with these influencers in ways that work for us and work for them.
Yeah. So, but like, all right, let's walk through this. So, all right, you have somebody that starts a newsletter, right? They're a big podcast brand and they're a partner of yours. Who owns the email list?
This is not something we know just yet. Is there a way where it's co-owned in the sense of, if they leave, they get to keep theirs, but we also get, like, now they're subscribed to 2 newsletters or something? Yeah. Is there that's like spiritually what I'd want to do.
Yeah. I just wonder, like, as somebody that sold a lot of ads over their career, like me as like the advertiser, I'd be like, wait, what? Like, so like there's issues there. I don't think they're insurmountable or anything like that, but it's a function of, I think it gets way more complex if you're actually spending money to grow that email list for them. Yes. So you're using your own capital to then grow that email list. It's like, I look at like work week. Adam's a good friend and tons of respect, but it's like, if he's spending the money to grow that list, like, and his deals are different than what you're describing.
He owns the talent. He owns the,
he owns it. And like, frankly, if you're spending the money, but then there's also the other side is the kind of the talent's view, the creator side is that, because of what I'm putting out, I'm also getting organic stuff. So do you own the paid, but I own the organic? Like, how does that work? And nobody's been willing to tell me. There's been times where pretty big names have left And nobody's been willing to tell me exactly how this stuff gets worked out. And it does. Yeah. But who gets caught holding the bag and who has all the value is kind of what I'm trying to figure out, because I don't think it's never going to be fair. So I don't know how you do it.
Totally. Yeah. No, I'll be curious to track that as well. What do you think we've well, let me ask you another question. The data too, even just like the first party data, like what's beyond the email address, like what do great media companies do in terms of like, what do they collect? What does Industry Dive? What do others, what data are they collecting on their reader, on their customer that, enables them to most target or optimize or sell or sort of, do business effectively?
Yeah. I mean, it's pretty simple, like name, title, company, job function. That's really all you need. I mean, where it gets more complex and where like part of where I think the newsletter stuff starts to fall apart again, like the business model of it, and you're seeing people change, is that once you have the standard kind of data, you need to actually be able to track what they're doing, what they're reading, and different stuff like that. Okay. And so it's a function of, I think there's two different layers to it. There's just the first party data you capture, which then is it going into your CDP? Is it going into, how are you then tracking activity onto it and things like that? But, again, like, I think one of the mistakes that we had made and we've gotten better at, but having certain standard data collection practices and the types of fields that you're collecting from day one and doing it right from day one makes your business a lot more valuable than having to we figured it out as we went along. And again, we had no media background, which kind of copied what other smart people were doing and, figured out our own way to do it. But it's a function of having those standard types of, fields and different stuff like that, and then be able to track what they're doing and why they're doing it is kind of the next step. And so we were ahead of the game on that. I mean, there was two people that were really running two good CDPs, at least in B2B, that weren't, Informa, and they were us and Industry Dive. And so it's one of those where we were making tech investments way before most people were, but we were starting to be able to use that data on a bigger scale. And again, we weren't the size of Industry Dive, but like we had the same kind of philosophies and at least execution strategies on a lot of tech and first party data. It's just theirs was spanned across 28 industries and we were 7. So
yeah,
a little bit.
It is interesting. I talked to a company, Smooth Media, that was doing sort of, an interesting model. They would partner with a creator who's big on one platform, like Colin and Samir have a big YouTube channel, and they said, hey, let's create a newsletter for them. And it's a no-brainer for Colin and Samir because they didn't have a newsletter. Now they have one and get some percentage of it. But I think Smooth Media has sort of evolved almost like a B2B marketing agency or something, where it's like if you have a bunch of, sort of platform, media properties, you not just want to connect them to a reader, but you maybe want to actually like help them sell in a much better way. I'm curious how you think about that, if things like that ever make sense.
Yeah, well, I mean, the data that you collect just enables you to sell different packages, and so it's one of those. It's a function of, I don't know I know of their business. Seem like smart people, but again, like to bring it back to the Colin and Samir thing, why wouldn't they have just started their own newsletter?
I think just because they too much work or like. I don't know. Not everybody's.
That's where some of it falls apart for me a little bit, but but again, I know they provide a service and it seems like they've done really well, but I'm not knocking it. But no, I mean, it's a function of, I think everybody looks at it as just, we're selling newsletters, we're selling this, but it's like, how do you sell multiple products? So, I mean, we had a pretty standard, I call it like standard B2B repertoire of like different products, whether it's, we have branded content for assets that people download, webinars, different stuff like that. So you're never just selling like newsletter ads. Like sure, there's a business there, but it's always what more can you sell? Because generally you'd rather, instead of somebody spending 20 grand, you'd rather spend them 40, but you can only sell them so many ads. So how do you have multiple products that you could sell to one person? You not only sell the ads, but guess what? When they click on that ad, they then go to a white paper that, guess what? Your branded content studio did. And after that, guess what? They're going to get invited to a special webinar with like all the experts from it. And so it's a function of how do you really sell the life cycle of that customer down the line? In order to do that, you need multiple products, but you also need to know who those people are. And that's why you need the data so you can then sell the advertisers. And so it's a function of, I don't know, having multiple products to sell. I think sometimes everybody's just like, newsletters are really hot. We're just going to sell newsletter ads, but most of the people don't want to actually sell the ads. They want like an agency to do it for them. I'm like, I don't know, maybe I'm a little bit different, but I see the world. It's like, I see some people give it away too much stuff, but But I also see a lot of value there too. I just think it needs to be structured in a way that everybody wins. Cause like, I don't know,
Yeah.
any good deal, everybody wins, right? So
Totally. That makes sense. Say, we mentioned WeWork. What do you think we've learned? You know, WeWork is trying, for the audience, is trying to do industry dive, but creator driven.
work week, right?
Yes,
So
work week. Not WeWork. We learned a lot of other things from WeWork, but from work week, what do you think? What have we learned just from watching work week? Areas where they thrive, areas where they've struggled. Adam's very, very transparent and a leader in the industry. He's come on the show and shared a bunch too. But like, what do you, as an astute, student of business media, feel like we've learned?
yeah, I mean, I think they've done a really good job. I would say Adam's one of the smartest I've met in terms of how he looks at stuff like getting paid back for the ad spend. So he takes a very, like, I'd call consumer kind of approach to like ad spend and having an audience funnel, and how he does that in terms of really drilling down into how valuable each subscriber is, what the LTV is, and things like that, where I think B2B hasn't gotten as sophisticated as kind of his approach is, at least not at the smaller to kind of startup, I'd say, to mid-size scale. And so I look at that and I see tons of value in that, just from a perspective of, I mean, he has raised money, so he kind of needs that in order to like raise more and different stuff like that to be able to prove back like what the return on investment is. But I think they've done a really good job of, Adam's a smart operator. I think they get stuff up to scale and then they kind of scale it back. And so I think it's one of those where it's not about reaching 1 million people. It's about reaching like the right 10,000 or a lot of these different industries that like I think we all kind of cater to. But I think they've done a really good job. I think he's made really smart things where he got into a ton of verticals and then he kind of pulled back, which with the ones that were working, which I think is like the very prudent kind of smart thing to do. So I think he's running it as a really good business. Yeah, and I like their business. I mean, Adam's super smart. I have tons of respect for him. If I were going to bet on one, like in the B2B creator space, like with what he's doing, I think that's a good one to do. But yeah, he's gotten it up to a certain size, which is really impressive. But, you know, I think the thing with the creator stuff, and maybe you've realized this, but like not everybody's going to be a smashing success. And so I think how you kind of spin it up, see if this works, can we get advertisers, and how do you like responsibly kind of pull it back or put somebody else in new or different things like that. I think that's a challenge, but like, honestly, it's the same with running a publication too. It's no different. Like, and so it's a function of, that's where like, sometimes I think it gets lost, is that like, they're really just running the same businesses, except you're giving one person more of a face. But I personally kind of like the Axios model more, where it's like, yeah, Sarah Fisher runs Sarah runs the media newsletter, but guess what? It's run by Axios. So it's like, you know, the brand, but Sarah still has the cachet. It's like, she's on CNN, she's on all the different kind of places. Like she's built it and they give her the face, but guess what? People are still buying the Axios brand.
Yeah, totally. That's what I'm trying to get to. Yeah. With her, I'm not there yet, but that's the aspiration. The, on the note, you wrote a great article that we'll link to, on Medium last year, creator-driven events business designed to kill traditional trade shows. Why don't you talk about why sort of B2B event companies got you so excited, and where you see the opportunity?
Yeah, so like we're probably like 2 years before before the sale, and I found a guy named Matt Middleton, who's a former, I think, Informa guy, young guy, but he's launched some massive event businesses off the backs of creator partnerships that he has. Now, his business is a little bit different than I initially thought it was, which I think it actually gets even a little bit more interesting. You should have him on the show. I'd be more than happy to make a recommendation or make an intro there. But it's one of those where he partnered with, I'm going to say the names wrong, Barry Riholtz, I think is how you say it, Josh Brown. They're IRAs, so registered investment advisors, with huge followings in the consumer and B2B space. And so it's a function of they wanted to take the traditional trade show. So you have Matt, who is a traditional trade show person, right? Has launched all these big trade shows. And he partnered with people that have a different vibe. Matt has a different vibe too, as you get to know him. I think he wanted to do something new, young, fresh. And so rather than launch a traditional trade show, they essentially launched a festival, which I think is very on trend right now. I don't think there's people like, there's different people doing that. So, but I think how he's doing it with the creators and how they've structured the deals, which I believe are JVs, So the creators own a piece, he owns a piece, his investors own a piece. Everybody's incentivized to help make this event popular and help it grow because everybody will do well. And then by doing it as a JV, guess what? There's an asset to actually fucking sell. So it's one of those where I think where part of the reason I really like their model is because once like the audience database and everything gets big, frankly, Josh and Barry, I think get less important to the deal because the asset's already so big. And it's I mean, they threw like, I think they had 1,500 people at an event like in year one. Like that doesn't happen a lot from scratch. Okay. And I think year two, there were 3,000, but it's one of those where I think it's a really important deal because you have the traditional media person, B2B media person, right? Who knows how to launch and scale events. And then you have kind of the new faces who can spin you up the audience really quick. And when you take both of those things, hopefully you'll have success, but they're all putting effort into, it's all entrepreneurs putting effort into one thing and they all want something that's going to be really valuable. Right. So it's like, they want to be rich, not famous. And I think there's a difference there where very few people I think can be both. And I mean, maybe they want to be famous. I don't know. They're big like personalities or whatever, but like, it's one of those, you can tell it's run by entrepreneurs. They want it to be successful, but their model is also a little bit different where they also make venture investments and they do different things like that. So it's a function of, they're really looking at the event as a way to spin off other businesses as well. Where I think most people are just looking at events as a way to build something and sell it. There's tons of money in that. But they're also looking at it a little bit different. So I don't know, Matt's one of the smarter guys I met in business media. He's definitely one to watch.
Yeah, no, totally. Yeah, I'll love to have him on. And I think it's interesting so basically what you identified is like, there's a ton of money in trade shows, a ton of money in B2B events, but you can make them a lot more fun, a lot more interesting. I think you said like, make them like festivals.
So it's kind of like the vibe's like much more Lollapalooza than like boring trade show floor. But like if there's anything I've learned over the last 10 years of media, everybody hates trade shows unless you have a really big one that prints out a ton of money. But like I think we can all agree that nobody wants to walk through a trade show floor booth and get like sold at or sold to walking down this, big boring beige hotel ballroom. There's got to be a better way. And so I think people like him, and there's some other entrepreneurs that are doing stuff as well, like Health's another one. Like you got the Money 2020 guys, all the different people. They've been able to make conferences fun. And it's like people want to go to stuff that's fun, and there's a lot of money to be made there. And so it's like, how do you take a more modern approach on the trade show business? And I think Matt's one of the more interesting ones because he's done it with creators and he's built something really big, really fast.
Yeah, that's fascinating. Talk about Hampton. Or what you think about paid communities. We talked about, where there's opportunity to do paid communities kind of at different niches or different executive levels in areas where there's not a ton of connectivity, but they should know each other. I think that's super interesting. One thing I've wondered is if paid is the right business model, because, I could just go to Hampton CEOs or other group exec, F-Suite does this for CFOs and say, hey, join the same group, but it's free. Like I don't know what's that proprietary or why you need to pay. At the same time, they can expense them often. So maybe it's not that big of a cost. So talk about how you think about communities.
Yeah. So I'm full disclosure, I'm a member at Hampton. So like I pay for it. So I can kind of give like my, I don't know if you knew that, but I think I was one of the first like 100 or something like that. But the way I look at Hampton, at least from my perspective of, I think any entrepreneur, being an entrepreneur, while people like, I think put a spotlight on it and different stuff like that, it's actually quite lonely in a lot of ways for many different reasons, whether you're like 3 people or probably whether you're 50 people. You need to have like important people. And I think having a peer group is something that's really valuable. And frankly, part of the reason why I joined Hampton was I wanted to see how people were doing it in other industries because I was part of something called the Verticals Collective. It was like, this one was free and we can kind of get into that, but the initial people was like Anand from CB Insights. It was started by Rafat, who is the founder of Skift. Sean Griffey was there. Joe Webster, who's Smart Brief, all these John Lerner from Breaking Media. Like, I mean, the amount of value that has been created from that initial group of people that met in like a free CUNY like classroom that was given to Rafat for free. And where we've all come from there because we had a peer group of people doing what we do and we were able to help each other kind of figure out how to grow the business. And if he had like an issue, it was just, I don't know, it literally it changed my life, like in terms of getting to learn business media so much faster than it would have if I tried to do it on my own. That I look at that and I look at Hampton, where I'm like, why aren't there these like peer groups for all these different industries? I mean, part of the reason I did it was I was curious, like, should we do something like this in senior housing or home health or different things like that? Because at the end of the day, I think like people want peer groups to be able to share things and learn, but how do you do that in a structured way? And I think what Hampton is really doing is it's really kind of disrupting like the traditional trade association model, at least in a lot of industries that we had covered. And I think more traditional industries, people would join an association, they'd send their people to it, they'd meet other people that do what they do. And it was always kind of like the glue that like kept the community together in a weird way. Now, I don't think you need that. Like trade associations went from like lobbying organizations to like networking organizations to now they're just essentially event companies, right? So all that kind of stuff has kind of gone away. And so Hampton's trying to, I think, kind of fill that void. But I think it, like with what Sam and Joe are doing, they've had a lot of success with it. I could see them expanding into like different, and I don't know this for sure, this is just a guess, but expanding into different like kind of roles where instead of just founders, maybe they do like VPs, or maybe they get into a finance. Like I really like what the guys at F Suite are doing as well. I think like they have the different ones. It makes a lot of sense. It's an event company that has a community attached to it. I haven't talked to them, but a lot of respect for what they've done. I think it's one of those where, again, you're able to kind of do it in one community and then you can repeat again. And it comes back to what I like about media, especially vertical media, is that if you get good at it in one, generally you can do it in other verticals as well. And I think that's what makes it exciting. And I think like the paid part, at least from my opinion, is if you pay for it, you're going to like value it more. If it's free, anybody's going to join. And if you're trying to have like an executive community or something like that, like frankly, people are going to care a lot more if you put 10 grand into it. So That's at least how I look at it.
Yeah, totally. Yeah. It's buy-in. Gearing towards closing here, you've been exploring podcasting a little bit, or just sort of reading about it. What have you learned, or what do you find curious about it?
Yeah, I mean, I think it's really interesting. It's an interesting space, especially from the B2B perspective. I think they're tough. They can be tough to monetize. I think you've done a really good job doing that based on like our conversations. But I think, the smaller you go, the tougher it can be. But the multiples are pretty low right now, at least on some of the stuff that I've seen. And so it's a function of like, are you able to do that, start to add different products around them, similar to what you're doing, newsletters, events, different things like that, where if they do have a big following, it's a podcast, can you convert that to something that's more first party data backed? And if you can, I think there's a lot more ways to monetize it. But again, I'm looking at like boring industries. You're doing like cool tech stuff. but that's essentially how I'm looking at the podcast. I just, as somebody, like I go on a lot of walks, I listen to a lot of podcasts, I get a lot of value out of them. But like, I also find that at times I kind of like lose track of them because like, I don't know, like a new album drops or something and I'm listening to less podcasts and different stuff like that, where I'm much more of an email person. And frankly, you have no idea who's listening, which would drive me fucking crazy if I had one. But
what advice do you have for me in general as you see me building Turpentine? My entry point has been podcast, but I'm looking to become multi-platform. If you were CEO of Turpentine, what might you be doing, or how would you think about how to grow as big a business as possible?
I'd just be trying to get people to convert into different channels, like that you can control a little bit more. Not that you can't control the podcast. I mean, there's tons of value there. People do really well with podcasts. I think they're awesome. And I think like what you're doing with the transcripts and how you look at like your data exhaust, that was really clever. How you can really do that. And I mean, the more data that you own and the more engagement that you can prove, I think the more valuable the company will become. It's like, I'm so tired of seeing all these bullshit, like newsletter growth charts and different stuff like that people do. But it's like, how many are actually like opening? Who are they? Are these random Gmail addresses that like you've gotten from like some dumb Substack, like referral service or whatever? It's like, the more you can own your audience and have more information on who they are and what they do, I think the more successful everybody will be. And frankly, like, there should be some, like, here's one of the things that I think is funny. It's like everybody's trying to make sign up so easy, but like there's value in the friction of asking somebody more than one question. Yeah. Like, even if you can't get them to fill out 3 things about like who they are and why they're listening, like, are they really that valuable? Like, I don't know. And especially when you're getting like all these every time I sign up for a Substack and it's like, do you want to sign up for these other 4 things? I'm like, this just like dilutes the value of like my email by like 10x. Like, and so it's a function of, how do you get good data and how do you actually build and then monetize it in multiple ways, which you're already doing, and how you think about it. So, I mean, you're clearly on the right track, but no, I don't know. Big fan of what you're doing. Listened to a bunch of your podcasts. I listened to a bunch before this to kind of get a better idea as well. But no, I mean, media is a great business, man. I think like I actually had, I don't want to say who, I had dinner with somebody who sold his company. And we both agreed that like, at least this first party data, B2B stuff has legs for the next 20 years. It's not like it's going away. So it's like, there's a lot of untapped value that I guess has been ignored for too long. But
well, that's an exciting way to wrap. We're at time, so I want to be mindful. John, thanks so much for coming on the podcast and sharing some of your wisdom with us. And towards the end of this year, we'll have to have you back. Maybe you'll have found your next thing, or whenever you find your next thing, and I'll have made some progress too. So look forward to it.
Perfect, man. Thanks for having me. If I can be helpful, let me know.